I don't know what's going on with my internet today, guys. So let me go back to what I was saying. It's gonna keep on bugging out on me. Let me turn off my video. You guys can see my screen, right? If I turn off my video, I think it's better. I know, right? Whenever it's important, I was gonna combine everything for you guys, but it's giving me an ick. Okay, so this is a downtrend, right? You guys would take sells. So when it's a downtrend, you are only looking for sells overall. Now, sometimes what we do is we do trades without, what's it called? Against the trend. And if you ever do that, you have to remember that your trades that you're taking against the trend, you have to put tight stop losses, right? Those are called liquidity trades, where you're taking trades against the trend to catch the liquidity moves, right? Liquidity grabs. Next week, we have an educator coming on board who is going to be teaching for 3 weeks. He's going to be showing you guys, you know, a lot of different terminology, but the same way that we kind of trade and combining everything together. So that's what we have next week going on. So you guys will be able to really combine all of this stuff next week. So I'm going to give you guys back to the, like you'll understand more of what I'm saying with liquidity grabs and sweeps starting from then. But anyways, we can see this is a sell. So what I like to do is in this area where there's consolidation, right? What I would do is I would put a line right here at the top, the highest price, and I would close it off at the lowest price that it reached, right? The end of the uptrend and the start of the downtrend. This is called the consolidation zone. So this is called the consolidation zone right over here. So you could see it went into an uptrend and it's in consolidation, and then it went into a downtrend, right? So in this area, if you are trying to take sells because you think it's still a downtrend, but you haven't checked your higher time frame, this is one of the mistakes that most people are doing. They're not checking the higher time frames and they're trying to do against the trend trades. You're going to be stuck in this consolidating area unless you know exactly when it's going to exit. And you could see right over here, in this area right over here, that is the area that the market finally gets out of consolidation, and that's during the London session, and then it creates a lower high, right, in New York. So this is when you'd be able to take your, you know, your sells for the rest of the evening, or, you know, for the rest of that week, and fill in all of these imbalances. So someone tell me what an imbalance is. Is this an imbalance right here that I'm pointing at? Or was it an imbalance? Yeah. And so what did the market do? It came down to fill this whole imbalance, right? Imbalance is an area in the market where it goes from like the price moved too quickly up, right? So now it has to rebalance itself and come back down, right? So that area, it was from Thursday, June 23rd, and it filled it on July 7th, right? So you can see that there is that imbalance covered. So if you know right over here, right? If you know that the market is going down from this point onwards, from this yellow line, that's when the market's going to consolidate. Don't you think that you can set up all your entries for sells in advance? Because if you have this line in place, where the market's going to exit consolidation, like your lowest point, you know, then you'll know, all right, cool, once it reaches this line, I'm going to take all my sells. So that's kind of one missing piece of the puzzle that you guys don't know, haven't done yet, is you haven't been putting in your boxes or your lines for marking where the consolidation is. So if we go to the 15-minute time frame, 15-minute is where you're going to be looking for your entries, right? That's where you're going to be looking for your entries. So now you'll never get stuck trying to do, like, you know, long-term sells to fill imbalances that are all the way down there until you know for exact sure that it will reach this key level, this line. That way you'll know when it's exited your consolidation area you'll be able to take those sells, right? So that's how you're able to target imbalances like this, because you cannot expect the market to go from here, from this key level, all the way down to target these imbalances until it exits consolidation. This was a whole week where we traded, okay? So now that you guys kind of understand that, you know that from your higher time frame, from 1 hour and 4 hour, right? You're gonna look at the overall trend, then you're gonna go down, then you're gonna go to something like the 15-minute, right? And I'm gonna show you guys also today how to trade, how to go down to the 5-minute correctly as well. So when you see on the 15-minute, now you can see kind of like uptrends and downtrends in your consolidation area, right? And I'm giving you guys examples of consolidation now because you're going to need to learn how to trade in consolidation. And that's why we're learning liquidity, because the market isn't doing clear uptrends and downtrends all the time, but there's still uptrends and downtrends within consolidation. So over here, this is overall up, right? So what I would do is I like to put a line from the bottom of this lowest point all the way to the top of this point, right? And I just like to mark that line there. This area is like a trend line. It's called a trend line. And you can see that there is liquidity on these trend lines as well. I think it was, whose session was it? I think it was Iban's session where he was talking about this as well. But a lot of you guys asked because you were not sure about that, but that's what he meant by that. It's these, this is called a trend line. And essentially the market likes to respect these trend lines. And if you know and notice in my entries, a lot of them, what I do is I have trend lines, not a lot, just 1 or 2 maybe, and I'll add them just to confirm when breakouts will happen, when you'll see market direction and shift. So here you can see I could have taken, you know, within consolidation, this drop that happened right over here, the black candle, right? And then this purple candle going up. How do we know that we can trade within this time? Because if it dropped down to this area, grab liquidity, where's my rectangle? This is all liquidity, right? These are all a lot of wicks, and there's a lot of liquidity being built up to kind of fuel for it to come back up. If I see lots of movement like this on a chart, on a 15-minute chart, and I know that there was a big drop and I see lots of wicks, then I know that it's going to go up to fill that imbalance, this one right here. Because I see lots of sell side, right? The bottom, I didn't put the market sessions, but let me see if it shows up. It's not showing up, but you see lots of sell side liquidity over here, lots of accumulation of, you know, buyers that are trying to push the market back up to reach back up to this trend line and fill this whole imbalance. That's why liquidity is important, because you can see like if there's lots of wick movement, what is the market telling you? Market is telling you that it's going to reverse, essentially. Now, what do I do if it reaches my key level up here? If it reaches my key level, I'm expecting one of two things. The first time it touches my key level, most of the time, what it does is it likes to go down. It doesn't like to push through it, right? This is the consolidation box. Remember this, the yellow box. So it likes to touch it once and then just respect it. And it will pretend like it's going in an uptrend, but it's really not. And here we have obviously a nice sell that you could have taken from this point onward to the bottom of that point, right? So from this point all the way down here, this wick that you see at the top is what liquidity, guys? Buy side. So what does that mean? Market's going to go down, right? That's exactly what it's done. It's gone down, right? Now let's go on to this area. You guys can see an obvious thing happening right here where it is a major wick in the sell side liquidity, right? If you see a wick like that, that's how you know all it's doing is grabbing money and then pushing the market up ultimately. And that's what it's done. So overall, it was a sell. It gathered liquidity and it came back up, right? That's what it's done. So what you can do is when you see something like this, you can actually take trades during this time. This is again consolidation, right? So what do you guys see here? Let me try and mark it up before I mark it up. What do you guys see right over here? What does that look like to you guys? It's a bearish order block, right? If I was to go on the 30-minute time frame, you'd be able to see it more clearly. Sometimes you can't see order blocks because you're on a 15-minute. So sometimes you have to go to the 1 hour, sometimes you have to go to the 5-minute, but essentially the order blocks on the 4 hour and 1 hour are more stronger and more, you're more likely to actually see strength in selling or buying with those order blocks. If you see it's order blocks on 15-minute, 5-minute, those are your entries as long as you've confirmed it on a higher time frame. So you could see here that obviously the second candle is bigger than the first. So what did London session do? I usually trade 1 minute. I go onto the 4 hour, 1 hour time frame. I find all my entries. I go onto the 15-minute and I monitor on 1 minute. So we're going to teach you how to do all of that. Monitor on 5-minute, 3-minute, 1 minute. It switches. If I'm taking silver bullet entries, that's on the 1 minute. So that's going to be next week. So here you could see this bearish engulfing, right? This entire order block that's created. So I could have taken this trade from here, this entire short, this cell, right? It's within my area. It's within my market session, right? So this orange box, it's within the time zone that I would trade, and I would have taken this sell. You guys see this is like, you see a lot of my entries are like that, right? And if I go down to the 5-minute and reset the chart view, where did it go? It's in my consolidation box once again. So let's go back. My computer is very lagging today. Here we go. If I go to the 5-minute, you can see more candles, right? Beautiful candles right there. Lots of lower highs being created. You guys see that? Lower high, lower low, lower high, lower low, lower high, lower low. You guys can see that, right? Let me show you. Oops. So you guys can see on the 5-minute, you can see this lower high, right? So you could have taken your other entry down up. Can you guys hear me? There you go. So this lower low, right? And now, how do I know that it's going to go all the way down here? I don't know that it's going to go all the way down here. Why do I close my trade where the bottom of this market is? I like to close my trades here, take profit 1, because I know that now what has it done? It's taken out liquidity from the bottom of this session. Let me show you guys. Right over here. Okay. This area right over here, there's a lot of liquidity over here, right? So market, what it's doing is it's trying to push down and take out that sell side liquidity of London. So I closed my trades. I closed my trades for that specific reason, because I know that there is sell side liquidity down here, and so I closed my trade there. So you can see on the 5-minute, it shows you more clearly your lower highs and lower lows. Now, the reason why I went all the way down here is I would take a second entry at this position, right? So once it's passed through my London, like I would take, 2 positions up here, let's just say, and I'd close one of my trades at London session just to confirm, because again, this is very volatile market right now. Markets have changed significantly. You can't expect it to go fill all these imbalances and make big moves. You want to make more like 1-5, 1-10, 1-20 ratio. And when you get better and better, you can do more. 1 to 20, that's too much for you guys. But like 1 to 5, 1 to 9, like that's like realistic, right? And even that is a lot. So the second one that I would have closed in is obviously Tokyo, right over here. This is the most basic way I can explain it, but I would have closed my trade at the bottom of Tokyo session because there's liquidity here, right? And this was probably 10 o'clock news that we see this news thing happen. So before the news, I went ahead, did my trades. Now I'm chilling for the rest of the day, right? If you're trading news, you want to trade before or after, not during. On Monday Mindset, starting not this week, but next week. Starting next week, we're going to go back into economics again because there's a lot of things I want you guys to know. But I would have 2 trades open. Yes, with different TPs. Exactly. So one TP, one take profit and I target this. Second one, I target there. Obviously, you have to check where what the imbalances are. No, in terms of lot sizes, I will, it really depends. I do a lot of stacking of my trades. So stacking trades, just meaning that like I take multiple entries all with the same lots, and my original first entry will always be a little bit bigger. But that's only when I see clear, this is like the most clear basic entry I could see, right? So I want to get out before this whole thing happens. You don't want to become liquidity, guys. You don't, trust me. You hear this so many times, even in the Infinity Project. Stop loss is going to be above your order block. Always above your order block. Where did it go? It keeps disappearing on me. Let me exit. Here we go. So this is over here. This is how you're going to be trading in consolidation, let's just say, right? You're going to have smaller trades always. So let's say over here, right? I closed my trade right here, and look at that, guys. What did it do? Because I closed my trade where the bottom of Tokyo session is, right after that, it went down, grabbed liquidity, came back up. So if you kept your trade open, you would have only made, up to their amount. So entering the market is not good enough. You need to be able to close your trades to secure your profits. Some people think that you're going to make so much money by holding the trade forever. Completely wrong. In this market, you need to close your trades earlier and earlier, like because it's so liquid, because the market is moving so fast and the banks are kind of shutting down, banks economy is just doing horrible. So they're trying to make money off of this trading and off of us. So you just need to be aware of that. So if you didn't close your trade where Tokyo bottom, the end of the session is, you would have been stuck in liquidity area and you would have it would have wiped you out. Okay. So you don't want that. Now, I'm going to show you guys. I know this might not make sense for everyone right now. It's okay. You can go back to it. I'm going to show you guys another really cool thing for those of you that really want to trade in this liquidity area. Because some of you guys, I've been talking to you guys on the Zoom sessions, not the Zoom sessions, the one-to-one sessions, and you guys are like killing it, right? And you guys are like, okay, so how do I trade during this liquidity? So I'm going to show you guys. So this would have been a nice sell for you, a very nice sell. But what you want to do, if you see something like this, 5-minute and below is what you're going to be trading. If you miss this entry, this beautiful entry right here in New York session, yeah, you exit the trade. And you know to exit the trade right over here. It's very simple. Just put a line. Just put a line where the bottom of London session is, where the bottom of Tokyo is, if it's a sell, and then you'll know when to close your trade. Very simple. Don't wait and expect it to close more imbalances in this type of market. You're gonna get stuck. This is again in the morning session. Afternoon session, you can't do that. So I forgot what I said. What was it? Oh, the Tokyo session, right? So you could see that since New York decided to continue to push down, normally I would usually just close my trade up here, but because it continued to push down, right over here, you can see the bottom of Tokyo, you can extend it up till there. You want to extend a little bit above it, not below, just because of liquidity. But anyways, New York did continue to come more further down. And the reason why is because it was grabbing more liquidity down here in this box before it came up. And why did it come up, guys? Imbalances, right? Don't forget. So if you missed this, how would you trade? Let's see. Now we're on the 5-minute. Now we're looking for a break of structure in a trend reversal, right? By the way, Ralph's videos online shows you about trend reversals very nicely. So you're looking for a break of structure. Now, obviously in the 5-minute, you're not going to see a clear and evident break of structure. Why? Because it's not going to do consolidation and then reversal. That only happens in 1 hour and 4-hour time frames. So when you're on the smaller time frame, right, you're not going to see that. You're not going to see that type of move. So here you can see automatically what it's done is there's, sell side liquidity taken out. It's going up. I'm going to move this green line so you guys can see. Sorry, it's purple arrow. It's gone up. Now it's filling this black candle right here. It's filling it completely. So from this position onwards, right? Once it's escaped from here, that is when I look for new entries. Once it's escaped from this area, because I like to call this the consolidation zone in my 5-minute or 1-minute time frame. Once it gets away from there, then I'm safe and I know that, yeah, let me look for actual uptrends. Why? Do you guys remember where I just talked about in 1-hour time frame, you want to mark up your consolidation zone, right? Within a consolidation zone, there's also consolidation, right? So if you are trading in consolidation, you need to be able to find where that consolidation is. And a lot of people don't know where it is. So this is how you find it. I hate how it keeps disappearing on me. So now I'm back in the 5-minute time frame, guys. And I'm showing you guys that where the liquidity was, at the bottom, that is where now it's a new area of consolidation. So until it breaks free, don't try and take any trades until it breaks free from this entire area. You've already made a nice sell, okay? Now don't try and be that person that's like, let me get last dibs. Do not. Now you want to go and wait for this type of movement, and you'd probably catch about, let's say how much pips is that? By the way, this is the ruler, it calculates pips. In this session, I don't know, 21, right? That's what you would have caught. So again, when you wake up early bird gets the worm. Remember, don't try and trade. After 10 o'clock to 11, you're like, there's nothing left for me. Yeah, there's nothing left. Everyone's done eating. You came late to the party, man. So even if you came late to the party, go check out Manara. They should have some trades available for you in other currency pairs, not in the major ones, but probably the smaller pairs, and you'll be good. I'm sorry, guys. Now look at afternoon. Is there anything left for these guys? The ones who wake up at 12 o'clock noon and they sleep in all day because they slept late, and they're waking up at like 10 o'clock, 11 o'clock, eating breakfast at 3 p.m. There's nothing left, right? So how are you going to make nice, big, long trades in this type of thing, in this type of market? And this mostly looks like consolidation. You can still take trades, right? You're looking at Manara and you're like, why doesn't Manara give me good trades? Look at this, man. There's nothing left, right? So morning buffet is finished. Exactly. So you want to make sure if you wake up so late, then it's up to you. And a good thing is that America is 6 hours behind. All right. That means that you guys can still wake up at 10 o'clock, and you're so lucky that you can still take trades, and New York is just waking up. So you guys should have no excuse. The only problem is that if you're working 9 to 5 in London, you'd have to wait until after the 5 p.m. London time. I think that's like 10 o'clock New York or something, right? I don't know. Someone has to do the conversion for me. But anyways, as long you're still going to be able to probably catch morning. But yeah, it's mostly for the people in New York. So what would you do if you're working 9 to 5? If you're working 9 to 5, I'm going to show you guys how to trade Tokyo and London. New York is pretty easy. It kind of gives you your setups, but you have to avoid news. Tokyo and London are really, really simple. Only because they follow patterns. They love following patterns. But New York has, look at that, news, right? USD pairs, all the USD pairs, the news comes during New York morning time. It's not going to come in London time. Only thing that comes in London time is going to be your GBP. So if you see GBP red folders on Forex Factory, you save this website, check it every morning. Do not trade unless you check this website. Make sure you know when the news is happening. And I don't know if you guys will be good enough to learn how to trade with news. You got a lot of you guys have a lot of this major skill sets, but I need you guys to do more independent learning, because you're kind of just doing whatever I'm telling you to do, nothing more, nothing less, which is not that good. So I will be able to teach you that, how to trade with news, but it needs to come to a level first. So let's go to Tokyo, right? This trade, this is on the 3-minute. And again, I have to look at the 3-minute, 15-minute, 5-minute on Tokyo and London, because it's still smaller than New York. 1 hour, again, we're in consolidation. Don't forget, this isn't your uptrends and downtrends. This is your consolidation area up here. So on the 1 hour time frame, you're like, how is Homayra finding these entries? I don't see it, right? You're like, oh, it just looks like a couple of candles. But there's still movement. You could still take this entire buy on the 1 hour time frame in Tokyo. USD JPY. USD JPY, the second currency is what? JPY. So wouldn't that be active in the Tokyo session? Yes. So if you're working 9 to 5 in London, or you're working 9 to 9, some of you guys are working 12-hour shifts. After your 12-hour shifts, you'd want to go to the Tokyo session and trade USD JPY or any of the JPY pairs, because they're active. By the way, whatever one of the pairs do, almost all of them follow the same pattern. The only one that's kind of funny is UJ, but anyway, almost all of them follow the same pattern. So again, check your timetable and choose the time zone that you want to trade, so that you don't get stuck trading during consolidation like these guys over here. You know, you don't want that. So let's say this is 1 hour, you see, all right, cool. Yesterday, what did it do? That's what you always want to check. So for the sake of ease, let me just move over to this side. There's so much going on my chart. New York afternoon. A lot of you guys didn't understand this, but New York afternoon ended down here. How do you manage taking multiple trades of different pairs? You have to start with one, and then you have to keep going and get really good with like marking up everything all at once. So every Sunday, every Saturday, Sunday, I do all my entries for the week. You know what, guys? I'm in this Arabic channel. The guy tells you which way the markets are going to go for the rest of the week in almost every currency pair. You guys just haven't been attending it. It's called Weekly Overview. And he even gives out signals for the whole week that you can just put as buy limit and sell limit orders. So yeah, someone can send that out. Maybe I'll show you guys, but it's on Eminence Arabic channel. He gives out weekly overview, and all you have to do is on Saturday or Sunday, you know, mark up what the direction of the market's gonna go, potential entries for buys and sells, and whatever one pair does, usually the other pair does the same. So for example, if I know what the dollar index is doing, I'll know what Euro USD is doing. I'll know what gold is doing. I'll even know what GBP USD is doing. But I also have that market structure marked out in advance. You guys don't have the charts marked out in advance. That's why you can't trade it. You have to mark it all out in advance. It doesn't just magically appear. So someone said there was a consolidation. I don't know what you mean. So anyway, let's go to this Tokyo session, right? I'm on the 1 hour time frame, and I see Tokyo started at the bottom of New York afternoon, the small tiny area, right? You see that pink box, the bottom of the box, Tokyo started, and it took out the sell side of New York's afternoon, right? And there was no other liquidity it took out. All it did was take out the afternoon sell side. So I know, cool, if it took out the afternoon sell side, now it's going to end off in a buy. This is again in consolidation, not during uptrends or downtrends, only during consolidation. So you can see now it is going up, right? What did it do at 8 o'clock? This candle right here. Let me go to the 30-minute. At 8 o'clock, where did it go? By the way, and just to let you guys know, it's not impossible to take multiple trades at once. It's very like, it's just, you have to put in that time and effort to learn, right? It's not, I've been doing this for some time now, so that's the reason. But baby steps, even if you do it with one, you should feel gassed, you should feel happy, you're like, wow, I just did it, you know, that's how you should feel. So I don't know where the other example went, but for the sake of time, you guys can see over here, let me move this line, this key level. So let's just say that London didn't happen, it's New York afternoon, and now Tokyo started down here. What did it do? It took out the sell side of New York afternoon, and now it went up, right? So how far up is it gonna go? At least to the top of this afternoon session, right? At least minimum. So automatically, I already could have had a nice buy right over here and close my trade right there. This is the most basic way to trade. Actually, it's not basic because a lot of people don't tell you this, but let's just say the bottom of this session, right? Tokyo started, the bottom of this New York session started, and now how far up am I going to go? There are no clear imbalances it's trying to fill, right? New York PM means New York afternoon. I have that instead of Sydney. Some of you guys have Sydney, please remove it. And I've changed it to between 1330 to 1600. Is there any liquidity? Yes. So it took out the afternoon liquidity right here. You see these wicks, right? All this nice wick, the purple candle, took it out, and it came up, and it came up to the top of here. Then I would have exited my trade. So to show you guys, I don't really normally take small trades like this, but this is something a beginner could possibly do. There's so much more to this, guys. There's literally so much more, but here you go. So this would have been, you know, a trade that you could have taken. Now notice how I didn't start my trade and I didn't enter my trade until it reached this green key level. This green key level, right? I did not enter my trade until there because it's still gathering liquidity. So until it reaches that, and again, I got it because of the New York afternoon session. Until it reaches the area, I'm not going to enter the market, or else I'm still, remember, I'm still probably going to get stuck in that consolidating area or that liquidity area. So I don't want that. So I'm going to wait until it reaches that level. Yeah, I'll show you guys. Someone's asking about the pending orders. I will show you guys on Monday, tomorrow. I'll show you guys live how to do it. Here we go. That would have been a nice buy trade, right? And 1 to 4. Again, this is just a small, really small trade and during consolidation that you would have taken. But if you go to the 5-minute time frame, it's going to look much nicer, much cleaner. It's probably going to look like, you know, it was better trade than what it showed in for 30 minutes. But again, you want to check your overall trend in the higher time frame, then start to slowly move down. So everyone's homework this week is going to actually be in the 5-minute and 15-minute time frames, because I want you guys to start to slowly get used to get comfortable with it. Because as I'm noticing, like the markets are moving way too quick for a lot of you guys, and you're gonna have to start getting comfortable with this. There you go. You could see there's even an order block right there at the bottom of that liquidity area. Don't worry, I'm gonna write the homework in the group chat. Is your key levels usually based on previous sessions liquidity? Yeah, that's what I do. I usually have that. I also have the highest point, lowest point, weekly highest point, weekly lowest point, and monthly as well. Monthly is more like for my swing trades, but so here you could see that order block, right? And remember, you're not going to take the trade until it reaches this green line. So my entry would have, I obviously have my entry down here, but you would have had your entry to be safe. Oopsie. Because you don't know if it's still liquidity. You would have had your entry up here, right? Where that bottom of that New York afternoon session is. So just wait a little bit. So what is this? 8 p.m., 8:05. Yeah, you can take that. And this ended within 15 minutes. So that's a 15-minute trade. And after that, look what it did. It reversed. So if you didn't close your trade, you probably would have been back. It would have come back down, back to your entry. And it would have you would have closed your trade and been like, yeah, I didn't make it. But then after that, what did it do? It went back up, right? So that's why it's important to have two entries in the same thing. If that makes sense. I don't know if that Englished at all, but that's why it's important to have multiple entries, if that makes sense. The first one is your safest one that you're gonna close right at the top of liquidity areas so that you don't mess it up. This is how you remain profitable even if there's like, even if there's lots of movement in the market. So the first entry, you close it at the top of this New York afternoon session for Tokyo. And the second one, in the same, as long as you enter down here, you close the second trade on, let's just say, so New York started here. So let's just say if it does go up, then it would have reached for this London imbalances right here, right? You guys can see these London imbalances right over here. And that's what it's done. It's reached for that. So do we wait till that candle has formed or passes it when it's making that candle? Which candle? Oh, basically, this is called a pullback. This area that you're talking about, right? So this area, oh my God. It's called a pullback or retracement, right? So if it retraces back to close to your entry, that would have been your second sign for like, you can buy again. But if you missed, let's say it's 8 o'clock and you missed it 15 minutes later, the buy is done. Wait for it to come back down and then wait for it to come back to your entry. It doesn't always do this, but wait for it to come back to your entry and then you can target the next buy. But remember that because it already took out this liquidity, what is it going to look for next? Yeah, I'll do that. I'll send you guys that. What is it going to look for next? The next liquidity area. And the next one is London, right over here. So that is, your next trade. Obviously, it came back down and it came up, but it didn't go all the way down to our stop loss, which is why you keep your trade open. But you want to close your trades before London starts. Don't try and expect London to make it go higher and higher. Please don't get into that. Look, you can see here that London was taken out by Tokyo. I don't know if you guys can see this liquidity. So how high up did it go? It did reach for this area. And so I would have closed my trade right there at the top of that wick. A little bit below it, right? That's how you're safe. Let me make it more clear. So London's liquidity is up here, right? London's liquidity is up here. So if you were to close your trade a little bit below where London's liquidity is, you would have been safe and you would have caught it. Make sure you have your take profits there. Don't leave open trades. That's how you have like these sniper entries, sniper exits. Because if you don't have sniper exits, you don't even have a sniper entry. I'll be honest. A lot of people have sniper entries, but they don't have sniper exits. The exit means the take profit area. So yes, it's going to reach for this London liquidity because obviously it went past New York afternoon. Tokyo kept pushing up and it filled all these imbalances. And then it went to the top of London's highest point. And yeah, after that, it reversed. That is how you make sure you don't become liquidity in the market. By closing your trades before the next session, by closing your trades a little bit before these market sessions, are opening. And this Tokyo session was a little bit interesting because it not only did the lower liquidity of New York afternoon, but it also reached for the London high. And this was on a Tuesday. How do you get the stop loss? Stop loss is always below my key levels, always below it, below my liquidity area, below my key levels. Take profit. Again, I just showed you that. So you could see after that, I wouldn't take any other trades, right? This is all reversals. Again, this is 15-minute trade. This is all going down all the way up here. It comes back up, but then this is more like consolidating. It isn't really any silver bullet entries or anything. But if you missed that, you could have taken this nice sell on London. Which session do you trade on? Usually every session, man, whenever I need to. On Fridays, I always trade Tokyo and London because I hate trading New York AM. Unless I know which way the markets are going. But then on every other day, like I usually just trade like depending on where my entries are. So I don't know if you guys know this. At the bottom, you see where it says Wednesday, 5th of July, 23rd, 1340. You can actually time where your entries are based off of this. That's what the time is there for. So I have all my entries blocked off for the week, or at least the next couple of days, with 2 scenarios planned out. But overall, it comes down to the DXY. If I know which way the dollar is going, I'm going to know which way the UJ is going and everything else is going. So I have that marked out more than anything else. And I'll know, cool, I'm going to take this trade. What liquidity is it going to go for? So I think that helps with just baby entries. I call this baby entries and baby exits, even though it's nothing like, not even like basic, but it is for consolidating markets, what you would do. I want you guys to get good at finding your, finding liquidity, right? We have this tool. What tool was it? This one, right? You guys can see that marked up now. How do I remove some of this ugly stuff that I don't want to see? There you go. So it shows you where your liquidity is, right? You guys can see that. It says sell side liquidity, buy side liquidity. It's pretty good. It helps you understand if you're trading within consolidating areas, where is the market going to reach up to? So you want to close your trades before it reaches these areas. That's how you use liquidity. Close your trades before it reaches for these liquidity areas. Would we get homework to take live trades on demo based on DXY movement? Yes. So which liquidity, higher time frame, lower time frame, liquid. All right. So I covered everything I wanted to cover. Now, what I'm going to show you guys is the homework that I want you guys to do is, obviously, I want every single person, now that you guys understand uptrends, downtrends, imbalances, order blocks, liquidity, wrap your head around that information. That's kind of the most important stuff that you have, that you need to know. Now I want you guys, all of you guys, to mark up the DXY, right? Mark it up, meaning that find the uptrends, downtrends, lower highs, higher lows. Find that. Find your key levels. Find the liquidity areas, okay, on the DXY. If you know where that is, then that way you'll know how to trade other pairs like Euro USD, right? Euro USD is the opposite of the DXY, and gold always follows what the dollar does first. Okay, guys, I know you guys are just staring at the gold chart expecting it to do something, but it will literally follow what the dollar does. I'm not sure why people don't understand this, but you can't trade gold just based off of market structure alone. There's so much more to it than simply looking at the gold chart. You have to mark it up. You have to find where it's going to enter and exit, right? And you can see here, and this is all liquidity pool, all of this, right, on the 4-hour time frame. So unless you're good at finding entries and exits on 5-minute, you're gonna, and during consolidation, it's going to be hard for you to trade gold. So that's why I want you guys to work on, number 1, the DXY. Number 2, I want you guys to start finding entries on the 5-minute time frame. Okay, 5-minute. If you want to get really good, look at 3-minute. Use what I've showed you about the market sessions, not on gold, please do it on Euro USD or USD JPY, up to you. Do it how I've shown you, like this. You can still use your lower highs, higher lows strategy for downtrends and uptrends, but I want you guys to start taking trades on your 5-minute, 3-minute, right, 15-minute, smaller time frames within consolidating areas and outside, and mark up the DXY. So I know it's week 6. I know it's a lot of stuff that I just said, but I think you guys are ready. And good news for you guys that are like, oh my God, all of that was so confusing. Good news is that we're gonna have somebody else next week, inshallah, that's gonna cover, back to how the way that he shows trading from week 1, back to that, and then covering those concepts again for you guys to solidify that knowledge. But nothing is going to solidify your knowledge more than actually applying it on the charts. Watching 100 million YouTube videos will not make you a trader. Applying this knowledge, making mistakes, actually practicing, looking at the chart will make you a trader. For example, right now you can see downtrend, uptrend, right? That's what's going to make you a trader if you analyze what the market is doing. And if you actually spend time on TradingView, that's why we give you that homework. So whenever I tell people find entries for the homework, that's what I mean. I mean, look for more entries like this. If you don't know how to use this, it's okay. It's not a big deal. just write it out with the text tool, or watch a video on how to do it. I think you guys can do that much, but that's what I want you guys to work on. And inshallah, I will teach you guys how to avoid, you know, right when the news hits. How do I know? I don't want to tell you guys this week because we have some guests on, but next week, or I mean, yeah, after this guy is done explaining, I'll show you guys how do I know which way the market's going before the news hits. I'll show you guys that. I don't think you're ready for it now, but because you guys already see that I'm pretty much been pretty accurate with my trades. And the reason is because we know which liquidity it's taking out first. I can't show you guys this now, but I'll show you guys in 3 weeks. So yes, guys, class is over. You guys are so funny. Like, I'm sorry about the mishaps in the beginning. For those of you that just started, again, EA Unity customer launch, watch this, right? It's going to show you for beginners how to copy paste trades. Not everyone needs to become a pro expert trader. Only the people that want to make this active income can become traders. And so please do the homework. Please send it to me. If you feel completely lost, don't worry. Like, trust me. Imagine how far you're going to be in 2 years. Just how far you're going to be in 2 years if you consistently keep up with this. Right now, everything feels hard, but doctors didn't become doctors overnight. They became doctors over 6, 7, 8 years. Thankfully, with trading, you don't have to spend 8 years. So I want you guys to take care of that, all right? I know it's kind of looks scary and tough, but trust me, inshallah, I believe the minute it clicks, it's gonna be so worth it. All right, guys, go and pray your maghrib and go and enjoy. Tomorrow, I'm gonna cover crypto as well as show you guys how to do the M&S Arabic pending orders and stuff. I'll cover some more things, troubleshooting if you need. And the guy who's going to be teaching you will also be doing an introduction call tomorrow as well. So please attend 9:30, and I'll see you guys. 9:30. Take care. Last week you mentioned some crypto. Yes, I'm going to cover that next week. Okay, guys, take care. Have a good rest of your evening. Don't stress. You'll be fine. You'll be great. And reach out to me if you have questions. My phone is always there with me. Bye.